Beyond the beat, slow feet don't eat. You went and made it, was your story. Beyond the beat, come talk with Teek. We all can make it, share your story. Beyond the beat, beyond, wavy. Beyond the beat, beyond, yeah.
Yo, welcome to the Weekly Close with CIC, where realtors keep it real and drop the knowledge you need about today's market. I'm your host, Teek the Agent, and every week we're breaking it down, the wins, the lessons, and the moves you can make to buy, sell, and invest with confidence. Let's get it. Today we have PMR Premier Mortgage Resources here again with us today. So welcome back. Welcome back. I don't know why that's not working.
Thank
Did you hear that?
Thank you.
Welcome back. And we also have a guest here. Can you introduce yourself?
Yes. Hey, peeps. I'm Felicia Butts, and I'm a realtor here in Arizona.
And what brokers you say?
I'm with Real Broker. I'm repping Real Broker today and just out here and support my girl T.
Awesome.
Thank you.
We appreciate you for joining us. We welcome all realtors from all brokerages because we're all here to accomplish the same thing. So if you guys would like to be a guest, please reach out. All right. We're talking about home ownership in 2026. How can you prepare? And let's do that with the mortgage company so they can let us know. That's where we get our money from, y'all, just in case y'all didn't know.
Absolutely.
Let's start with Giancarlo.
Oh, so we're going to start with me. Hey, guys, all right, so let's talk about 2026. Okay, so first off, we're recording this right at the end of December, right? So I'm sure that everybody's got their presents ready and everything else. Are you guys the late present purchasers?
We don't do presents.
You don't do
Right.
presents?
I'm a procrastinator for sure.
Are you really?
We get gifts all year. So
Yeah,
we don't
that part.
I'm with you, T. I'm with you.
Yeah, we don't wait to the end.
No, so
We don't do gifts.
honestly, this is the second year that we're not doing gifts. So we do a little exchange, and that's it.
This is our 4th year.
That's
we're in
phenomenal.
deep. We committed.
Honestly, what started changing that, and this is right on topic with this, is we started trying to focus a little bit more on our financial planning, right? And planning as a family, versus, just trying to give the kids, the kids and everyone else, presents. So it's completely changed our dynamics and honestly, our planning forward. So that is going to be the first advice I'm going to give everybody for home preparation for 2026. Okay.
I love that.
So 2026 buyers, okay, if you are looking at doing a transaction in this time, you are not late to the planning. You are early to your planning. Okay, super, super important, right? So this is when we start making good financial decisions on what we're going to happen or what we're going to do for 2026 in order for us to accomplish that goal. So it all starts now. I honestly feel like many people feel like, man, if I end the year, and I still have debt, then I'm not going to be able to purchase next year. That's not the case. That's not the case at all. But we started this because honestly, as a family, we did get into, debt and purchasing, right? And you have a little bit more income and then things start kind of going crazy.
More money, more problems.
Absolutely. More money, more problems, more taxes. Okay. So unfortunately, that's a kind of a big deal for us here, right? So it's been really, really interesting. So if you guys are listening, please keep in mind you are ahead of the game planning for 2026. Okay, so it's never too late to start.
And I think that's key. When I'm giving advice to potential clients, they're always like, "Oh, my credit ain't good." I'm like, "Yep, I know. Have you talked to a lender yet?" Because you guys are the ones to tell them what position they need to go towards. So yeah, you're here today, but what do you want to accomplish? You still can accomplish that, but you have to follow our plan. If you stick to the plan, you will achieve your goals. Now, if you don't have goals, that's a whole different situation. I don't think they understand that it's not as easy as having good credit, buying a house. You can have good credit and your debt to income ratio is out of control. A lot of people do not understand. They always say, I make good money. Okay. what's good money and how much debt do you have? And let's talk about that, because that's the
Absolutely.
scary part. And that's the part that I'm always pushing back on you guys to explain. I don't like to get involved in that part. And you guys can see the real numbers versus the nice numbers that we get. So
Yeah.
Absolutely.
I love that too, because I have like clients, come to me, potential clients, and they go, "Hey girl, I'm ready to buy a house." And I know they're making 7-8 figures, and it's like, when you go to talk to you guys, the mortgage people, it's like, no, Felicia, they can't buy a house. I'm like, what do you mean? They make all types of money. And
Yep.
you're like, I don't care. But because they haven't gotten their credit in check. So
they just have way more debt than
yes,
the
and they have a
income
bunch
provides.
of debt. Yep.
And you still have to live. There's percentages involved in this, and I think people don't understand that. They just look at their paycheck, say, I got a lot of money and I can do this. And unless you paying cash, you want a loan, these are the qualifications you guys look at.
So going back to the more money, more problems, right? Because you make more money and you're like, oh, hey, I think I can budget a new boat in. I think I can upgrade my car every few
Exactly.
years. And that debt just keeps growing and growing and growing. Yes, you have a great income, but ultimately it's like, okay, well, your money is going to all these other liabilities, not assets, right?
Right.
And then when it comes down to qualification, it's like, wait, hold on, your debt to income is like super high. So I don't care if you have an 800 credit score, if the debt to income's not there,
Right.
it's the challenging part.
So, Felicia, I'm going to touch on that point that you said right now. So here's tip number 2 for home buyer readiness, for 2026. Credit will matter more than rate. Okay. Now, this is a little bit of a bomb, but here's the truth about it. Interest rates grab people's attention
All the time.
all the time, but credit score quietly makes the decision
Drives
on
it.
where you land.
Yep.
So, what's a credit score? And I say this to every single one of my clients.
You're right. Can we throw that back when they say, what's the interest rate? Can I say, what's your credit score?
There you go.
I feel like it's a cuss word almost that you
Yeah.
ask. No, seriously, if we're not a lender, they looking at us like,
Why you in my
They're
business?
they're
Exactly.
offended. They're offended
They are.
by
Yes.
it. So that's why we push them back to the lender to let you guys handle.
Absolutely. So I tell this to every single one of my clients. Credit score is nothing more than a numerical representation of how good you obtain, utilize, and repay debts.
How financially responsible are you?
That's it. So it has nothing to do with how much money you make. It has nothing to do with what
Y'all hear
position you
that?
do.
Y'all hear it here first.
Yeah. It has nothing to do with, where you live, what you do for a living, none of that. It has to do on your relationship to money and how good you manage debts. So that is going to be super key for anybody purchasing right now in 2026. We really need to start getting a little bit more mindful, right? And become a little bit more self-aware, right? Of how we're actually spending our money. The truth is this, I actually, I was doing some research, right? And I have a client that's doing a cash out refinance, and he's like, well, I got a lower interest rate, right? And, trying to pay off some debts. He's like, I can just go get a personal loan and do it. And I'm like, okay, perfect. Well,
Wait for it.
let's find this out. So did you know that in 2025, the average APR for a personal loan is 31.7%.
And they worried about 6%.
Exactly.
That's crazy.
Okay, when we arm
my
ourselves with
gosh.
knowledge, we can actually do a little bit better decisions.
I agree.
Okay, but obviously we know this, right? Knowledge without action
Right.
is nothing.
Right.
So remember,
Let's not talk about my Tesla purchase, but that's okay. Go ahead. I'll recover that in about 4 years. So
okay. Well, I mean, so did you use the credit, towards the purchase price of the car
it
on
has
taxes?
nothing to do with that. It has to do with buying in 20. Yep. There you
ouch.
go.
Okay.
We can
all right,
skip
I get
past
it.
that.
Well, they didn't have it then, because I have a 22 Tesla, and they didn't have it.
It is much.
Yeah.
It's so much deeper than that.
And we pay cash for
if
it.
if you bought in 2021 or 22, you are now
Not
upside down.
Right.
That's what it has to do with it.
Yeah, we just
So-
bought it cash, so
Yeah.
yeah.
But if you ever try to sell it, it's not going to be worth it. Is what I'm saying.
That part.
Yeah, yeah. See, I just really wanted what I wanted, and
Right.
it was only like 2 electric cars out here in Phoenix at the time, and I bought one for an extremely large amount of money, and now I cannot get rid of it. No, seriously,
Really? I haven't checked it. Wow.
Yeah, I would never. Ever since Elon kind of,
Oh.
turned everything and he
Yeah.
sliced. So basically, you can get my car brand new for $40,000 less.
Wow.
Basically.
Ouch.
Yeah.
So it's okay. Lesson learned.
Absolutely.
If I had waited and did a little bit more research, I'm not saying I could foresee that was going to happen.
Right.
No, it
But
can.
it's just it's insane. I can never get rid of that car. So it's just like, one of those things. And I think about like
We all have those purchases,
doing
by the way.
research. Yeah, doing the
Okay?
research.
We all
I
have
mean,
those
my
purchases.
interest rate is good, but it was just like I've never not been able to get rid of a car.
Yep.
And it was just like, you know what, I'm just gonna do some things to it. And it's a new car. There you go.
Right.
But
Just, take
more
care of your
research.
assets.
It's
yeah.
a
More
lovely car,
research.
though. I love my car.
Yeah, I love it too.
I mean,
but
you know. Because
Okay, so our listeners, please, okay, don't
about to go down a rabbit hole.
don't plan on buying a car in 2026. Okay. Now,
Yes.
if you are a business owner, I totally understand why your tax person is telling you, your CPA, your EA, whatever it is. They're probably telling you, hey, let's go look at getting a little bit of extra tax, deductions.
It's
there
not
and
worth
whatnot.
it.
Listen, you got to put your priorities straight. Okay. So you guys have to understand too as well. If you're a business owner, your SE, tax, forms, self-employment tax is not really a tax. It's actually going towards, your Social Security and Medicare. And then you have federal taxes and you have, state taxes with that. Please plan accordingly. So if 2026 is an asset, you want to purchase a, real estate, we need to talk about it. We need to do planning. And by the way, I have actually another little tidbit for you. So, what do we do with our clients, with our business owners? We send them a tax organizer. Okay, so if it's individual, if it's a Schedule C, if they have rental properties, if they have S Corp, C Corp partnerships, so we send them a tax organizer so we're not missing out on deductions that can potentially help us qualify for real estate, right? So they fill it out and they can send it over to the tax agent and whatnot, but there's a ton of stuff that they don't have to miss. But I guess that kind of goes into with all of these points of preparation, right? What do you guys think?
So, with all this said, right, with budgeting for 2026 and money, do you guys hold classes? Like, I think that would be an excellent thing for mortgage companies to do to hold, like, I don't know what you want to call it, budgeting.
I don't see lenders doing that.
They
Can
don't,
you?
you
Is
know,
that
like-
is that allowed? I don't know if that's allowed.
Right.
I think that's a great idea. It's a great feedback.
Right.
So-
Money
I only
101 or
see-
something.
I only see brokerages, but you guys are guests, right? But
Correct.
are you able to host on your own?
We can. Okay, so
classes, right?
here's what happens, right? There's actually been a couple of different places, and remember, I have a little bit of a different position because I have like a tax background, right? So I look at finances and look at these things a little bit different. So, when Patricia's talking to a business owner, right? And they're like, hey, let's analyze these tax returns and let's kind of figure this out, right? I have a different perspective with it. So when it comes to financial planning, okay, there's 2 realms that can happen. I can show you, we can do classes, where we can have the whole entire family come together. And there's a super cool budgeting program that I actually have, where we can incorporate families and kids, and everybody else. And they kind of start understanding how taxes and budgeting work. But now when it comes a little bit higher than that, now you need a financial planner, you need somebody who's dedicated towards that because they do have a lot of personal questions when it comes to that stuff.
Right.
So yes, we can absolutely open the door to that. And then I would actually partner up to have a financial planner come in and, we can host these both in Spanish, English and whatnot. So yes, actually I'm going to take you out on that so we can actually plan them out.
I think that'd be excellent.
Yeah, because we don't see that. We see it from brokers that
Yeah.
bring people in, but I think it's a different flavor
Yeah.
when
from
it
the
comes.
lending. Yeah.
Yeah,
Yeah, because
From the
we're
lending
the money,
perspective.
right?
you're the
that's
money.
kind of our
We
world.
need money there all the time.
And understanding where your money's going and how you're making those decisions is absolutely, important.
Yeah, yeah. I try not to wing it because they be trying to get us roped in, and I be like, hold on, hold please.
Yep.
This is who you need to contact.
Yeah. I don't talk the money with them at all. Like, no.
We try.
I mean,
they try to.
they try to get you. Yeah, no.
I would like, no, because things change so fast. We thought it changed fast on the real estate end. No, it changed faster on your side. Our forms are our forms.
Yes, yes.
We might change one form in 6 months.
Right.
Our process don't change.
Right.
Yours do all the time.
Absolutely.
It does.
So when they hear Fed cut, interest rates going down to 4%. Why?
Nope.
Because it was a Fed cut.
You know what? We can make a whole entire episode around.
That's a whole
how to
episode.
do that.
I know, right?
So we can kind of break it down. In layman's terms, yes, what actually happens in the economy when this moves.
I think that's
happen.
a great one.
But I think that we should address the fact that when feds do cut rates, that is not the same thing as mortgage rates.
Exactly.
And that's what y'all
Mortgage
need.
rates do not always follow the Fed cut.
The-
that the
is there
Fed
little
funds is
things,
something
that we
completely
don't
different.
know?
You need to be like, bum, bum, bum. Yes, I love it. Love it.
So, okay, and we'll do a whole podcast on this, right? And
Yeah.
let's talk about what the feds are actually cutting, okay? That's the intra-bank rate. That's the amount of interest rate that banks are actually paying
So not you,
for borrowing
The
money
banks.
from the Federal Reserve.
not you.
Now,
So think
the
of
banks.
credit card, the APRs on your credit cards, on your
Absolutely.
personal loans,
Absolutely.
things like that.
That's what we need to hear.
Yep. So, we'll talk about that. But now, so point number 3, right? Of home ready home ready awareness and ownership for 2026. Cash planning is bigger than down payment. Okay. 2026 buyers who win or who are going to win are the ones who understand total cash to close, not just their version, their Instagram or TikTok version of I'm going to buy a house. Let me repeat that. In 2026, the buyers who are going to win are those who understand total cash to close, not their TikTok or Instagram version of buying a house. Here's the reason why.
Well, before you go into the reason why, can you explain what that means?
Exactly.
All right. Closing costs, appraisal gaps, reserves after closing, those are going to be tremendously important things for us to realize. Okay. So very often, people compare rates, and that's the only thing they do. Oh, I can get a better rate here. I can get a better rate there. What they're really not understanding, right, is that closing costs do form a part of their total amount of money that they need to purchase a property. Title fees, insurance, taxes, impounds, escrow, HOA
Buy-downs.
transfer fees, right? All of these things are a component complete of it. The buyers who win are going to see a wholesome approach, not just an individual interest rate.
That makes sense.
So we have to be very aware of that. If you plan for this, then you know where you're winning. So I actually have, I love this quote. So I tell my family this all the time. Every chapter in your life deserves a different scorecard. So if you're looking at buying a house in 2026, let's figure out what that scorecard is going to be, because you might be playing by older rules.
Right.
And if you're comparing it to the anomaly that we had, during a global pandemic, and you're like, I'm going to wait until rates go back down. Well, let me say it this other way. I'm going to wait until there's another pandemic in order for me to buy.
Yeah, that makes
That's really
sense.
what it is.
Yeah, it makes sense.
I
I think a
mean-
lot of sellers are.
They're waiting for something to
I
happen
think they're
that's
playing,
not.
Yeah, I think they're
happening.
playing with that 2020,
Yeah.
21
Yeah.
scorecard.
Yeah, yeah.
Like,
It's really 2020, because 2022,
yeah,
a
2020.
different thing happened.
That's true. That's true.
So
yeah.
yeah.
Really 2020.
Yeah, yeah.
I think
It's
they're
really
playing with that.
2020. Yeah.
So isn't that crazy how we don't really think about it that way? Because we're still playing by older rules, and that's
Yeah.
what our metric of winning is by. If I didn't make it in 2021, then I'm losing today.
Yeah. So when we're talking to clients right away and they mention those years, or they mention something that happened, and I know what year, and I'm like, oh yeah, you bought your house in 2022, huh? Okay, so how much you want to sell it for? Yeah, that's not gonna happen. Like, I know, because I've seen this, I've done the research, and I won't take on that client because I know that you won't settle for less. And if you won't settle for less, then I'm not your realtor. I'm gonna be honest with you.
Right.
I'm not gonna let a house sit on the market for 90 days that I know it's not gonna sell because you're too high, or you want to get what you pay for it. Well, unfortunately, they were selling homes higher than the comps back in 22. 2020, you pretty much got a deal. You guys are sitting in a deal.
Yep.
But 2022, they start spiking, and
right.
now people now are starting to feel the effect of that because they want to sell, and they're all going to take a loss.
They
on
want the
that.
top dollar.
And they want the top dollar.
Yeah,
You're
they
right.
won't. I mean, even what they paid for it, you're not going to get what you paid
Nope.
for it unless you did some. I mean, you have to do, large projects in your house,
absolutely.
and it's not putting in windows. People, please, it's not putting in windows. I know you love them. I know you love your floor, but appraisals don't care about that stuff.
Or the backsplash.
No,
Correct.
ma'am, I need you to add like 3 rooms to your 3-room house.
To
and
compare
then,
it with that
and
other
then
million-dollar property.
there you go. The one that's around the corner. So, yeah.
People need to be comfortable with cutting their losses.
Yeah.
Right? Do you really want to sell your house? Okay, let's be real with numbers.
Yeah.
Your house is going to sit on the market for how many months, right?
Right.
Rather than let me just sell it really quickly and get it over with.
Unfortunately, a lot of realtors are not that honest.
They're not. And they just want that listing. And
Yeah.
now their listing is sitting forever. And
Yeah.
now your client's like, well, why is my house not
Yeah.
selling? Because you didn't have that conversation with
be
them.
honest. Just be honest. It's not, I mean, it could, but I need you to put in your head that it might not. And if it don't, then what's the next plan?
But you can be honest with your clients, though, right? You can be honest with them, but at the end of the day, we work for them, right?
Yep.
So you can be honest, but if they are just like, it's either
Yeah.
one or two things can happen,
Yeah.
right? You're gonna like have a plan, say, hey, we're gonna do it at this price for so long,
Yep.
and then we're gonna have to have that conversation and maybe take it
Right.
down.
Right.
Or, like you said, they're not the client for you.
Hey, I
and
walked away.
sometimes it's hard, very hard
Yeah.
for that part,
Yeah,
for us
yeah.
as realtors
Oh,
to
yeah.
do that
Oh,
for
yeah.
various reasons. Not always about money,
No.
but just for various reasons.
Right. Well,
you know?
we want clients that trust us and trust us as licensed professionals. And if you
Yes.
trust me, and now that was the first house I ever sold, but it was so smooth because I kind of watched other people sell houses, and I'm like, man, if I get a listing, this is what I'll do. So I already, when I got it, I was like, oh yeah, I'm gonna do A, B, C, D, E, F, and I did that. I prepared them. Hey, yeah, 45,000. Don't even think about that in your profit. Let's move forward, because I was letting them know this is what you're going to have to sacrifice.
Absolutely.
Let's move that to the side. What are you willing to take? If they offer, I gave them all the scenarios so they can be always thinking, and nothing was ever I didn't know that.
Nothing was a surprise.
Never, ever. Because I always prepared them. Okay, you asked for this, but if you don't get it, what are we doing tomorrow? I'm always, preparing them and having them give me an answer so I'm prepared for the next step. This house is marked $25,000 too much.
So you see how important
It was 25,000. Literally, it was 25,000 too much. In 7 days, I'm going to come back. You guys are going to decide a number, but we need to go down because comps are 480.
Yes.
And they didn't believe me until an agent. We only had one booking, one booked agent that came and saw the house, and their feedback was
Too high.
too high. And I screenshotted it, sent it to them, and I said, "You see?" And they were like, "Oh, we should go down 20. Let's go." I mean, it wasn't 40, but I took the 20, and I'm like, "Yeah, we don't have to go. Let's see what this do at this number." And sure enough, next week we were under contract. But had we had, it would have been faster. But I'm glad that they were able to see and trust me as a licensed professional that I knew what I was doing.
Yeah.
So planning, extremely important. Extremely important. So that's why you call Teek.
Yeah.
That's right. So I'm about to sing your jingle. You call him Teek.
See?
He's singing the jingle.
That's right.
Sing the
Slow
jingle.
feet don't
Absolutely.
eat.
Exactly. All right. So point number 4 for home ready preparation for 2026, employment stability beats income spikes. Okay. Why is this important? So lenders, honestly, they love boring income.
They do.
Predictable.
You've been there
They don't
25
like a
years.
challenge.
Absolutely. Boring, predictable, consistency is number one key.
Yeah.
All right. That's what they love. We call those easy deals.
Yeah.
Okay. Now, I get it. Some people have just, job hopping, right?
Yeah.
So let's try to reduce that. And you have to understand that when you're trying to get qualified and if you've had job hopping, where you're trying to find a better job, obviously, please still do, right?
Right.
I'm not telling you to stay in the same place forever. But what I am saying is you're going to have to give it time to work.
Yeah.
Because we have to get verifications out of every single one of the jobs that you've had. You make the qualification process longer and a lot more skittish. Okay.
Riskier.
Or
too.
Yeah, very
riskier as
riskier.
well,
Yeah.
right? Because I mean, imagine this. I mean, you're asking for a $500,000 loan, right, to pay it in 30 years, and you're telling the lender, or you tell the bank or whoever's letting you borrow the money. Well, I've had 4 jobs in this past year, just because I just didn't like them. Okay,
A red
hold on a
flag.
second.
Yeah.
That is a red flag,
Yeah.
right? So you have to be careful with that. Okay, so employment stability beats income. So understanding how your income gets calculated is going to be tremendously important. Knowing how your bonuses, commissions, self-employment, how we review that, it's also extremely important.
So like for doctors and nurses that work
Doctors, nurses, business owners.
those split shifts
Shifts.
and
Yep,
shift
shift differentials.
differentials and
Yep. Avoiding big career moves, right up until you're coming into the mortgage process. Now, we can make it work a lot of times, right? But if you are shifting into a career that is 100% commission, and you're used to having a salary, okay, let me tell
that's
you.
not all realtors, right?
Exactly.
And
So-
most of us.
Because I
too.
love, just for to say,
So, realtors, if you're actually looking at buying a house this year,
I'm
okay,
not.
so we need to make
We the worst though.
because
We the worst.
yes, I worked at my corporate job for 8 years, and then I was like, yeah, I'm done with that. I'm gonna be a realtor. Okay, I'm not buying anything though. So for a long
like,
time,
It's like, okay, show me your income. It's like, what?
I don't know.
I got money coming in this account. I got money coming in that
Listen,
account.
it's scary. It's
Yeah.
scary to be an agent right now.
It requires a lot of due diligence, right? A lot of boldness. Okay, I got to tell you this, and I love to be bold with my clients. Tell them, hey, where we're at and what we're doing, right? And leading to helping them be better. Okay, that's really the number one key for me when we're actually talking to clients and helping them figure out where credit is, where their income is and whatnot. One other tip, okay, if you are self-employed, if you have a business, a lot of times you guys come to us, right? And you say, hey, I want to buy a house and I'm making, $500,000 in my business. Okay, please understand this. That's not what you're declaring on your taxes. That's not what you're telling the IRS you're making. And you are applying for a loan that has federal regulations, my friends. Okay? So can we still get you qualified? Absolutely. But don't come back and say, hey, I want a low interest rate and I don't want to pay any taxes as self-employed. Those two don't add up.
You got to file taxes.
That
as
sounds like a
self-employment,
realtor.
please.
Though. That sounds like.
I know it sounds.
I know you can do it. I watched you do it.
Yeah.
I know you can
It's scary.
make
though.
a miracle.
It's scary. It's scary.
Before you go on to the next topic, I think that it's important that we highlight if you are changing jobs, if you're going from a W-2 to self-employed, you're starting the clock over again as far as income goes.
See,
Yeah.
I don't think we knew that.
No.
And I think that's very important. A lot of people
Say it
don't
again
know
for the
that.
people in the back.
Right.
So if you're changing jobs, if you're hopping jobs, if you're going from a W-2, being a W-2 employee and getting your paychecks and having that stable income to now becoming self-employed or a 1099 contractor, your 2-year time starts over again.
Didn't know that.
So
It's very good to know.
yeah, that's 100% true.
So you
okay?
can't add that 8
There is-
years that I was just at Banner.
There is one small exception.
Oh.
Okay. One small exception. And that's where, everybody's like, oh, that's exactly how No. Here's the exception. If you were in a job, okay, that gave you the skills for you to open up your business and it's in the same line of business.
Oh, I see.
Okay.
I
Okay.
see.
And now you're switching over to Schedule C, right? Or
Okay.
you're opening your self-employment. I'll get a little bit into mortgage guidelines here. So this is how it works, right? So let's say that I'm a trucker, right? I'm driving and I'm getting paid W-2, and then I decide to open up my own trucking company, right? So now I'm Schedule C. The guideline reads that I need to be 12 months, okay, standard year, calendar year, consistent in that for me to qualify. So I don't need 2 years. So I just need to know when to make that move.
I got you.
That's
So
good to know.
So if
That
I start
is.
my business in January 1st, 2026, okay, by the end of December, right, in 26, I would officially have had 12-month consistent on self-employment income, which means that I can qualify for the house during next tax year.
Didn't know that.
So in your scenario, Teek, I don't think that your income would.
I know.
Yours won't work.
It
I
wouldn't
just
count.
I just want to say it.
and also like a lot of people are not going to stay in the same job line.
Right.
Absolutely.
It's going to be something completely different. So I think that's an important highlight
It
so
is.
that people know that. because they're like, okay, well, I make good money now, but I can make better money as a self-employed doing this.
Correct.
And it's huge
Absolutely.
to know as a realtor, because that's something like Teek said she didn't know. I didn't know it. And just for idle conversation when we're talking to potential, clients, that's something we can say, well, like, oh, hey, I just changed my job, and I'm I just started my own business or something. You're like, whoa, wait a minute now, So
It's a different conversation.
Yeah,
We try to
thank you.
we try to dive in a little bit deeper just so we can give you guys a better picture when we bring them to you. I hate to just throw them to you and you like, they wasn't qualified, but we try to like dig just a little bit just so we can see and we can educate on the part that we do know that's not so numbers driven, but it's more education, right? So
Absolutely.
if we're solid, when we get the information from you, then it's easier for us to prep them before we bring them to you.
On that note, I would say personally, I don't mind if you guys don't do any of that. I don't want any realtors trying to pre-qualify with
No,
clients.
just
No, not
just
and having-
conversation, because we have conversations with them. They're like, "Oh, I got to go to work, but what do you do?"
Yeah.
It's just like in passing, not so much as I don't want to know because I have my
and
own.
then that kind of goes into point number 10, right? That honestly 2026 is going to really reward all those buyers who intentionally prepare, not who just arbitrarily decide to make a decision to purchase. So you
Right.
start the conversations early. You will put yourself in a good team. Honestly, if I'm trying to succeed, whether I'm in sports, in mortgage, real estate, it doesn't really matter. I'm going to want the best people around me. And the best people around you are those who care about you and can lead you and can help you through those difficult times.
Yep.
So I really do believe that those are the people in 2026 who are actually going to succeed.
All right. Let's succeed. I'm a believer. I believe that.
It's the year of the horse. It's 2026, the year of the horse. It's on and popping.
All right. We're going to close out. And with that, Giancarlo, could you please provide us where we can locate you or find you or your social handle?
Absolutely. So you guys can actually find me at Gian_Anduray on all social media platforms. Okay. So it's GIAN_Anduray. And yeah, that's where you can find me. Or my phone number is 623-552-2582. So shoot me a text. Let me know how I can help.
Thank you. And Patricia?
You can find me on Instagram, and it's Patricia Bundy, MTG. And you can contact me at 725-239-7626.
Thank you so much. And Felicia, how can people get in contact with you?
Okay, on all socials, you can find me at felicia.j.butts Realtor on all socials. And my phone number is 419-699-2048.
And I'm your host, Teek the Agent. You can find me at Teek the Agent, Teek Garens, Teek. What am I? Teek Garens at Teek the Agent at Gmail. Everywhere. Just look for Teek. You will find me, guaranteed. All right. That's a wrap. You have been tapped into the weekly close with CIC, where real agents bringing real stories and real talk. We'll be back next week with more gems, more game, and more ways to win. Until then, stay locked in.
Do it just for me. Take it. Straight road, man. Beyond the beat, slow feet don't eat. You went and made it was your story. Beyond the beat, beyond the